Hello and welcome to this week's episode from Conservative ETF Investor for the stock market update. Today's date is August 19th, 2017. I am your host. My name is Ken, and here is the homepage for Conservative ETF Investor. Once I get done with this video, I will upload the link right here so you can click right there in order to see it or catch it from YouTube from my channel. The other thing you can do, no, well, actually, that's what you can do in order to see the video. And then while you're on the home page, you can scroll down and you can see our current ETF recommendations. And what we do here is we follow 7 ETFs. These are the symbols right here over 5 different asset classes. You can learn more about that under our Portfolio Ideas tab and our percentage allocations for our hugely diversified portfolio. The item that I want to bring to your attention right now is our current posture on our positions. We are currently under a hold posture on all of our positions. We have seen some weakness in the market, and I'll go through that when we look at the charts. How well has the portfolio done? By the way, here's our total of all dividends since our buy inception date on our transaction dates, and our beta of this portfolio is 0.63. Okay, this portfolio has done since the buy inceptions 15.14%, not including dividends. And since calendar year 2017 only, it is 7.96%, not including the dividends. So that's how well the portfolio has done. And now we're going to jump right to the charts, starting with the first one, which is the S&P 500. Now we use stockcharts.com for our charting surface. And this here is a symbol SPY. It's the S&P 500 traded on the New York Stock Exchange. These are weekly charts. So we're going to look at weekly charts with a 5-year time horizon. Each one of these bars you can see here in the thumbnail as an example, this large clear bar, that's representing one candlestick, 1 week of trading. Down here is the open, which is right there, and up here is the close. On a red, it indicates that it opened up here and it closed down here. Same thing with a black candlestick. It opened here and it closed here. Okay, so that's how those candlesticks look like. Now, here you can see that the S&P 500 has been trading in this upward trading wedge pattern for quite some time, going back towards the beginning of 2016. And you can see that right now the ETF, the S&P 500, has softened up over the last 2 weeks with everything that's happened, and we're coming down to touch our two moving averages. We have 2 moving averages here, the blue and the red. The blue is the 17-week EMA, and the red is the 34-week EMA. Okay? All right, so those are the 2 exponential moving averages that we use, and we're coming down to touch the blue. You can see in the past we've come close to hitting the blue, and it's just been very, very strong, and all of 2017 really, it's just been a strong S&P 500. So it's always been riding above that, but now we're coming down to touch it again. The MACD. We use 2 momentum indicators. The top one here is the MACD, which is the moving average convergence divergence. The one underneath this is called the slow stochastics, or slow stow. And on the MACD, you can see that we've been traveling flat for quite some time, which, by the way, that's a negative divergence because the ETF has been traveling up while the MACD has not been traveling along the same path and making new highs. It's been traveling flat. So that's somewhat of a negative divergence that you see there. We're in a fairly high range here of 4.506, and now it has you can see previously we were below the signal line. We were coming up to cross above it. We touched the signal line, but we bounced off of it, and now we're heading back down. So this is somewhat negative momentum for the MACD, and you can see it here in the chart pattern. So from the MACD's momentum indicator, it's indicating further weakness thus far in the S&P 500. Now the slow stochastics is more of a shorter term momentum indicator, and it is now below its signal line and it's below 80. Both of those items are negative. So further suggesting that we are going to cross through below the 17-week EMA and come and at least come down to the 34-week EMA, but we shall see. But it appears as if we're going to break through this trend line. Now I do have a sell signal in here, or stop loss order at 239. We're currently trading at 242.71. Okay. All right, so that is it for the S&P 500. We're going to move on to our next chart, which is QQQ. QQQ is the NASDAQ 100 shares, okay? And it it went down 0.61%. By the way, I forgot to mention what the S&P 500 did. Let's get back to that. The S&P lost 0.58% for the week. Okay, let's go back over here to QQQ. And okay, so basically we know that we lost ground. Now here the chart pattern is the NASDAQ 100 was so strong it broke up above and out of its upward trading wedge pattern, and then stayed up above it, and then this became pretty much a support line because it just stayed up above it. I also have a sell signal in here, a sell stop loss order of 235.80. The current trading is at 141.23. Okay. We are seeing signs of weakness right here. You can see that in the chart pattern. Lower lows, lower highs. MACD traveling down below its signal line. Now you see here in the thumbnail how the MACD tried to come up and get above its signal line, but it never got above it, and it crossed below the signal line. That's considered especially bearish, as opposed to crossing above it and then coming back down. So that's a bearish activity. Slow stochastics, same thing, below its signal line, below 80, bearish plus bearish. So the the NASDAQ 100 is definitely showing signs of bearishness here, similar to the S&P 500. Moving on to the next symbol, which is IWM. IWM is the symbol. It's the Russell 2000. These are small caps traded on the New York Stock Exchange. Had a negative week, losing 1.14% for the week. Here you can see the upward trading channels that the Russell 2000 was in, and then it was hugging along this lower support line for the longest time. And then let's see, 3 weeks ago is when it broke out of it, and has since been traveling south ever since for the last 3 weeks. We have a sell stop loss on this position at 131.83. Okay, currently trading at 134.92. The momentum indicators, let's see here. On the MACD, you can see that has pretty much closely followed the S&P plus the NASDAQ 100, where it's come up, touched the signal line, bounced down below it. The slow stochastics, same thing, below 80, below its signal line, but it's coming down, getting closer to this 20 level, which is kind of like an oversold level where you get a bounce. You can see where you've had a nice bounce here, and then it jumped up. Here, when it was coming down close to that and then it bounced up, is when you got that spike up and that gap up right there. It softened after that, but that's what happened when it got into this oversold kind of area. 20 is more of an oversold, but we're approaching that now. Let's see, what are we at? 33.47. Okay, so that is on the IWM. Next one is VEU. VEU is the Vanguard All World Excluding United States ETF, traded on the New York Stock Exchange. It had a positive week of 0.55% for the week. Here you can see that we have a couple of trend lines that should extend that one out a little bit, because that now that it's above it, this what once was a resistance line is now a support line. We are traveling above that support line, and that is what is happening. We're seeing some strength here. Now you are seeing a loss of momentum here in the MACD. We are traveling below the signal line. It looks like it's rolling over is what it's trying to do. Slow stochastics below its signal line and below 80, 77.41, and it's right at the top edge. So it appears as if we're going to see some further weakness here. You see the tops of all these points right here? That right there is a definite support zone right there where we should see a bounce and then come back up if this all world excluding the United States is going to hold its support level. Otherwise, it'll break down and get back down over to our support level, our possibly our stop level. See if it bounces above that or closes below that. All right, so that's it for VEU. Moving on to TLT. TLT is our bond portion of the portfolio. TLT is the 20-year Treasury bonds traded on the NASDAQ. It had a positive week, gaining 0.15% for the week, pretty flat. You can see here in the thumbnail from the close of the previous week to the close of this week right here. But we're trading inside this wedge pattern right here. So you have a declining tops trend line, which is now a support line, and this here is a resistance line going back all the way to 2015. So we're trying to see if we can get up above those 2015 highs. We're still below 2015 highs there. So that's where we're at with the TLT. On the momentum indicators, you can see the strength here in the MACD. See how it tried to get down, getting towards its signal line, never crossed below it, never came close to it, bounced, and now is going back up north away from its signal line. This is a very positive and bullish action, further suggesting that we are going to come up and at least test this resistance line right here, if not break through it. Especially with the weakness in the stock market, people are fleeing to bonds for safety. So that would lend credence towards at least coming up to here and possibly pushing beyond here. The slow stochastics indicator bounced at the 50 mark. It's above its signal line and getting ready to go above 80. It's at 76.53. This is a bullish posture for the slow stochastics, indicating further positive things for the TLT. So that is a positive action right there. Let's move on to the next one, which is VNG. This is our real estate portion of the portfolio. Symbol is VNG, paying a dividend of 4.49% annually. Had a positive week, gaining 0.11%, which is pretty much flat, but that's what it was. Here you can see that we have been in this bouncing pattern in between this resistance and support line going back since pretty much 2017. And it's just been bouncing back and forth. Right now, over the current week and the previous week was a definitely, look at that large red candlestick, a very negative week, but we held its ground. It had a higher low, but obviously not a higher high, but at least a higher low. And that's a good sign. The MACD, looking at the momentum indicators here, the MACD is, well, it's currently in a bearish posture, but you can see how it's been traveling parallel and just going, it's getting whipsawed back and forth, which is due to all this activity back and forth, back and forth, back and forth. So at this point in time, it's not really the greatest indicator. The chart pattern is going to be a little bit better of an indicator to tell you what's going on there. The slow stochastics is below its signal line and below 80, which is negative. That's definitely bearish. But the price is holding tight here. So price is, even though these are the momentum indicators, price is key. So I mean, if we hold out here, it appears as if it's going to come back and go back up. REITs pay a nice dividend, and it is somewhat of a flight to safety. So I would not be surprised with weakness in the stock market to see further gains here, or at least coming up towards the top of this range in VNQ. Okay, let's go on to this is our last ETF for today, and this is gold. Symbol is GLD right there, traded on the New York Stock Exchange, had a negative week, losing 0.40% for the week. And here there was a declining tops resistance line that had been in place for at least 6 years. We just broke above it the previous week, which is this white candlestick. Now, this current week was a down week, but you'll notice we are still above this declining tops resistance line, which is now a support line. So even though it was a slightly down week for gold, gold is still looking positive. Your momentum indicators, we've been traveling flat on the MACD, but it looks like I've got a tops resistance line. If this MACD can get above that resistance line, that would further give proof that we're traveling up. If it were to break down below this support line, that would give further proof that this is not going to be going up and going to be going down. The slow stochastics is above its signal line and just getting ready to break out above 80s, which are positive actions here. I personally believe that the gold is going to continue to go up and at least come up to the 130 level, and currently trading at 122.30. Now that was our last ETF chart of the day. Now I have two more charts to show you. The first one is the VIX. The VIX is the volatility indicator for the S&P 500. It had a negative week. Okay, these are no longer weekly charts. Now on the VIX, we look at daily charts with a 1-year time horizon is how we do the volatility index. So we have two charts, the VIX and the VXN. We're going to start with the VIX. Now the VIX has two moving averages, a 50-day EMA and a 200-day EMA. The blue is the slower, the blue is the faster, the red is the slower. The blue is getting ready to cross above the 200-day, the 50 above the 200. And because this is an inverse indicator, when that happens, it's negative for the S&P 500. So down here at the bottom, I've got a chart of SPY, which is the ETF for the S&P 500. And you can see that as this volatility indicator goes up, the S&P 500 goes down. And here, as the MACD goes up, the S&P 500 will travel down. So you can see that the momentum is going against the S&P 500 right now. We are closed at 1426, which is above the 50 and the 200. If it stays up in this range, the 50 is going to cross above the 200, which would be not a good sign for the S&P 500. Okay, let's move on to the last chart for today. That chart is VXN. That's this one. VXN is the volatility indicator for the NASDAQ 100. It had a negative day on the last trading day, down 4. Now on the MACD, you can see that we did a little bit of bouncing around, but we are traveling, the overall direction here is up. Down here I've got symbol QQQ. QQQ is flattening and rolling down. Here the 50 is above the 200 and the indicator is above both. These are all bearish activities for the NASDAQ 100. suggesting that we are going to get further declines in the NASDAQ 100. So that is it for today's charts. This is all brought to you by Conservative ETF Investor. Please check out my homepage. There'll be a link for it at the on the YouTube video at the bottom. And please click like and subscribe to the channel. This is Ken signing off. Thank you for watching.